Have you ever wondered how governments and companies borrow money? It happens in the bond market, a massive space that keeps the economy running. At its core, a bond is just a loan. When you buy a bond, you are acting as the lender to an organization. Bonds pay interest, often called a coupon, which provides a steady stream of income to investors over the life of the loan. Different bonds have different levels of risk. Government bonds are generally seen as safer, while corporate bonds may offer higher interest to account for risk. While stocks offer ownership in a company, bonds represent a debt promise, making them a common choice for investors seeking more stability. Bonds come in various lengths, known as maturity. Some are due in just a few years, while others can last for decades. Keep in mind that when market interest rates rise, the value of existing bonds usually falls. This is a key dynamic for every bond investor. Understanding the bond market is a great step in your financial journey. Subscribe for more basics to help you manage your money with confidence.